Varun and Ghazal, thank you so much for joining us here for what promises to be a very special conversation. You know, we've been tracking the Mamaearth story on Young Turks and Startup Street for ever since the company actually was incorporated. Ghazal, let me start by asking you, it was born out of a felt need. You wanted a product that was safe, that didn't have chemicals, that was not toxic, because you wanted that for your own child. And that was the very start, the very birth of Mamaearth. As you look back, since 2016 to where you find yourself today, what have been the big challenges that you've had to overcome, and what's been the most exciting part of putting this together?
Hey, first of all, thank you for having us. I think looking back is always a very special feeling to have, because from where we started with a very now I would say with a very narrow vision of just operating in one category to today having 6 brands under the company has been a beautiful journey. The long and short is just 6 years old. But I would say, and starting with what's the most exciting part of it and what has led us to be here where we are today, I think has been our consumers. And one thing which has worked really, really well for us has been constant listening to them. They're the ones who told us that Mamaearth had the capability of not just being a baby care brand, but also operating in the adult segment, and gave us the opportunity to play in the beauty and personal care segment across baby, skin, hair, body as a category. Even after that, just keeping a close focus on how their behaviors were changing. In a same day, a same consumer was opting for different kind of products, which made us envision that, you know, these are actually very big propositions which can be catered through different opportunities and different brands, right? That's how I think we've moved not just from Mamaearth, but to Derma Company, which is an active-based skincare brand, to a Be Blunt, which we've recently acquired, Ayuga, Aqualogica, and similarly. So that has been the most exciting journey, just being on the lookout for what's the next big thing that consumers want us to do. I think there have been a fair amount of learnings, especially if I would say that having a long-term vision and not a shorter one, which not just limits itself to opportunities within what you're doing right now, but also extends to people, of how you're thinking of the team and the org structure, not just from today, but from a tomorrow's lens, and getting ready for how do you see the company grow forward in the 3 years, and some of those aspects I think have been our biggest learning points.
Varun, you know, when you talk to the FMCG giants, I think the big question that everyone is asking is, how has a 6-year-old company been able to get into so many different categories?
The journey has been consumer first in nature, and once we figure a problem that the consumer is facing, the process of figuring out how to solve that problem with the product, that assembly line or that process is very similar for every category. It starts with a problem, it then starts with scanning what kind of solutions are available, why are they not fulfilling that problem today. Then, for example, one of the different things that we did was the whole aspect of shared ecosystem. I think it's been a game changer in the last 5 to 7 years, right? And that shared ecosystem does not only exist in, you know, the Uber, Oyos of the world, right? It exists in all aspects, right? I mean, aspects of finance, supply chain, warehousing, right? And also, if you look closely in aspects of production, and in aspects of R&D, and whereby, for example, we were able to use the wisdom that's available across ingredient suppliers and manufacturers globally. We always looked outwards to say, hey, who else can help partner with us in this journey and create a win-win solution
So you
to the
converted
success.
your weakness into a strength.
Yes, right. So we actually looked outwards, right? Got these partners on board, and so whatever conceptual brief we developed, right? We gave it to a BASF, Croda, Lubrizol, and we said, all of you guys come with the best prototype, and we will put that prototype into the consumer testing. And whichever prototype does the best in terms of consumer response on sensorials, effectiveness, texture, clinical trials, and is what we finally take it forward. And for them, the win-win is if their prototype wins, their ingredients sort of, go into commercialization and that gets sold. Right? And so all of them would compete, right, to actually work with us and get these formulations going. And hence, suddenly, for a young company who wanted to get into 6 categories together, and there were more than like thousands of these scientists who were working on different kind of formulations to help us get there.
So here's what's interesting. So it's a D2C brand that doesn't own the R&D. You've got partners who are actually doing the R&D.
So now, of course, we do. Right? I'm talking about.
Now you do. But when you started off, R&D was outsourced, manufacturing was outsourced. Yes. So essentially, that's how you built the business around partnerships, around outsourcing most of your core, the core aspects of the business.
Actually, I would say core is marketing, innovation, and sales and distribution. Some of these larger core competence partners, right, because they've excelled in their own sphere, and hence it's more effective as well as more efficient.
So Ghazal, more effective and more efficient, and do you believe this is the reason why today you're one of the few profitable unicorns? Because in that sense, you haven't taken on the overheads that many others would, and this is why your unit economics are actually positive today.
I would like to say yes, but I think one of the main reasons for that also is both of our backgrounds, right? We come from a middle-class family where both of our fathers have been running their businesses, and the only thing that we knew was once profit is there in the companies when money comes home, right? So I think that was a part of us in some way when we started out. Of course, very early on, we did not have as much money also to invest into some of these things, and hence we figured our way out around the resources that were available to us, and we tried to use them the most efficiently. I think one of the things that we still very strongly do is return on everything that we spend, be it time or money. What is it that we are getting in return? And that focus has actually helped us be profitable.
Of the two of you, who's the more sort of, cracking the whip on every number, checking the return on capital and the return on time?
No, in fact, both of us, right? I more on the business and marketing side, she on the product margin side. Right? I always sort of, define frugality.
That's one of our core values, by the way, as an organization.
I define frugality for my organization as the way Indians buy grocery. Right? जितने मर्जी अमीर हो आप जितने मर्जी गरीब हो, right? You will buy the groceries, you will negotiate for the best rate, and then you will ask for some dhania mirchi as well.
That's exactly what I was going to say, dhania and mirchi for free.
Exactly, right. So I think that mentality, that frugality mentality is important across the organization.
You started your journey as a digitally native brand, but today you're moving aggressively into the offline space as well, not just with Mamaearth, but of course, Be Blunt and some of the other acquisitions that you've done. How differently have you had to think, or how differently has the playbook had to change to ensure that you're making the best use of what you're doing online, but now as you move into the offline space, you deliver on that proposition as well?
So I think when we started out, honestly, offline was not one of the markets that were most efficient for us. We couldn't have cracked it. And even if we had to, imagine a new brand coming up, probably doing a pilot in one store on a shelf where there are 1,500 other products. How would you gain consumers' attention? It's actually very difficult.
How would you get shelf space to start with?
Absolutely.
Yeah.
Right? Yeah, but that's difficult, right? You cannot communicate beyond what's there on your packaging, which is where online seemed to be the right channel for us, where we said that when you're starting off, you actually need your first 1,000 loyal consumers, and online actually gave us that opportunity to not just limit ourselves to any geography, but play pan-India. And those 1,000 consumers could be anywhere in India. But till the time they were understanding the proposition, the product, and believed in what we were saying, they would come on board. So I think to start with, that was a beautiful channel. But like I said, we've always been listening very closely to our consumers. As we moved forward in our journey, our consumers are the ones who told us where they wanted to see us. So when they said that, you know, we would love to experience some of these products before we buy so that we can see the texture or try the products out, and offline is something that we are looking out for, is when we actually progressed into the offline channel. And not just offline, now we also have our exclusive stores, pan-India, where not just the products, but the entire brand philosophy, the goodness inside, the planting of trees, the plastic recycling, and how we recycle double the amount of plastic, all of that experience also comes to life. So I think that's the only route that we are following. So wherever they want us, you will see us there.
Yeah, but you know, it's a completely different ball game, isn't it? I mean, in the online world, you don't have to take on the distribution muscle of the FMCG giants, which you do in the offline world. How has that been for you? Because, you know, the legacy incumbents perhaps are not playing in the online space to start with, so you got a free run there, but they are in this space. So how are you taking on the incumbents in the offline world?
No, so honestly, you know, one of the things that we've always believed in, right, is if we would have honestly been looking at competition, right, we would have never even launched, right? Because from day one, people said, "Arey, there are so many giants. There is Johnson & Johnson, there is Himalayas and Baby Care. Kaise koi young brand ban sakta hai India mein, right?" Similarly, when we were going offline, of course, everyone said, "Oh, there is HUL, there is L'Oreal, there is all of these guys. How can you get into the market?" Right? Like Ghazal said, we've been actually very consumer focused, right? We don't care about what others are doing, right? Because honestly, that's not in our control. Right? What's in our control is understanding that there is consumer demand, and showcasing that demand to the retailer. And see, the retailer has a certain business model, right? Of course, there is velocity that they're looking at, right? But apart from velocity, there are two other things that matter to them, right? I think one is the margins that they make on a product, right? And can you be a little better than, you know, what the current players are, especially in the short and medium term, and that will give you a headway. And as we shifted, we were very cognizant that we need to ensure our media, right, is also going out to support and giving air cover to this, right? Because velocity is very important, right? And so as we moved, we also started doubling down on, for example, the traditional mediums like TV, right? And we use television medium to further increase our reach, right? And that gave us velocity. Right? And the whole channel in offline is just about winning that early trust. Right? If initially the retailer understands the business logic, right, and starts seeing strong velocity, and you see them then asking and providing you and giving you more shelf space themselves.
Insights about what India is buying.
Oh, it's I think one of the biggest surprises for us has been how again the biggest strength, which for a lot of people is physical distribution, right, was actually limiting them from experiencing real India's purchase power. And a lot of companies, especially younger companies, even in consumer products, right, have 50-60% of their revenues coming from metros, right, and then almost 70-80% coming from tier 1, right? And the belief is really the premium population, etc., lies here, right? If you look at folks like us who are we are not racist around geography, right? We don't care urban, tier 1, tier 2, right? Wherever the consumer has interest in buying power, right, we are willing to deliver in that pin code today. Right? Suddenly for us, 60% plus of our revenue is coming from tier 2 and beyond. And I mean, that has been the biggest surprise for us. I mean, last quarter we would have serviced 3,000 plus cities and towns in India, and that kind of depth was just unimaginable 5-7 years ago, and that has been the biggest surprise.
What are the next big triggers that you're working on as a company today?
I think our vision is fairly clear. We, I mean, if I could say, our aspiration or our desire is to be the #1 FMCG company in India in the beauty and personal care sector, right? So that is what we are gunning towards, and I think we see the journey to be bright and very positive. Focus, of course, is on a sustainable business and growing sustainably. So I think in any brand's life, or in any, for that matter, business's life, there are phases, right? There's a growth phase when you're investing disproportionately to grow your base, to get to more consumers. Then there is a phase where you're trying to work out your unit economics and see that, okay, this growth is sustainable. And then there is profitability, like we call it, right? That you're able to grow the business profitability and get the juice out of it. So I think we are on the third phase right now. We have our core brand, which is Mamaearth, which is growing really well. It will continue to grow as fast. And then we have our new engines, which are currently in the growth phase, I would say, where we need to put in investments to get them to a level where then they start. And the good thing is that we are breaking our own records. So what Mamaearth achieved in a particular time are actually new brands and new engines are breaking all of those records and growing much faster with I would say better P&L for if that's the word that I can use. But I think those are the green shoots that we are seeing. We will continue to invest in that. And the other thing which is going to be very important to us is building our team and building very strongly. So like we were talking about, right? 2 of us inside the office or outside the office doesn't actually impact the business. That continues to run the way it is, and that has been our biggest strength. So that's something that we'll continue to focus on.
Yeah, and Varun, I want you to come in on that, because I think that is a very important issue that often doesn't get enough attention. But I know that you have been very consciously been trying to beef up your board by bringing people onto your board, people who understand the business, but also, in a sense, institutionalize the business so that it's not overly dependent or overly reliant on the two of you.
Yes, no, I think both have their own strong value. I mean, on the board side, I think most startups largely have boards which are comprised of investor directors. And two things wrong with that, purely that mix, right? One,
they're conflicted.
Clearly there is conflict. Right? And two, not necessarily. Right? They have, while they might have seen sectors or other startups, right? They might not have seen the next level of governance standards which are required to take the company to the next level, right? Or seen actual regulation, MCA, and what kind of compliance pieces are required at different points of time, right? So I think on that front, we have felt that independent directors, right, specifically folks who have different kinds of skills and experiences, bring a lot of value to the table, right? And it's been phenomenal how much value addition we have seen. And of course, you also need to become a little more mature and a little more well-behaved. You need to sort of, understand that, the quality of board meetings, the quality of pre-reads, the quality of the data that gets shared, and at timely how you share it sort of needs to go up significantly. So you need to gear up, right? But the advantages are just amazing, right? And that gearing up side is where then you need the right team, right? I think at different phases, right, of the business, as founders, you also need to reinvent what your core focus areas should be, and for what kind of areas and roles, right, do you now need professionals who can deliver significantly better value than probably you would with the limited bandwidth that you have. Right? And basis that a new organization design needs to take shape, right? And at least in our case, every 2 years, right, we've sort of worn that hat and looked at a new organization design and then brought in the right people who then we believe will take us to where we need to get to the next level, right? So I think actively we need to keep doing it, right? It is not a process which stops.
You know, the aspiration of wanting to be India's #1 FMCG company, and Varun, I'll start by asking you, what are the next milestones along that journey?
Shane, firstly, it's a very long journey, right? And we have to be very long-term oriented and think about this as a multi-decadal build and opportunity, right? Is how we are looking at it, right? Because I don't think we're the only ones who have this dream, and I'm sure there are others.
ITC's been dreaming of that for a long time.
Yeah, right. I mean, of course, there is वो कहते सूरज से ज़्यादा चमकना है तो सूरज से पहले उठना पड़ेगा, right? तो I think we will need to work really hard, right? And we will need to not only work hard this year, next year, but probably for a couple of decades, right? To take this there, right? And keep it there, more importantly, right? And then, you know, focusing on building the right organization, building the right board, getting the right partners from an investment perspective. Right? The landscape is just fascinating. It's fabulous. I mean, we have one of the lowest per capita consumptions of beauty, lower than Bangladesh, in fact, right? Hence, the way is just up, right? Penetration of categories like face washes is just 30% in India, right? This is going to reach 85% levels over the next 10 years, right? Women joining workforce is a massive trend over the next couple of decades. We're already seeing very good leading indicators, like, for example, secondary school participation of girls has overtaken boys now. Right? It was 45% in 2005, became 82% in 18, and now is ahead of boys. Right? Very strong lead indicator. The next couple of decades, these girls are going to come in and change landscape. And when they come in, of course, it's amazing for the economy, right? But specifically for the category beauty and personal care, right? It's a massive delta that trend leads to. Right? And I hope next time we are here, we will see a lot more female faces in this room.
I can't agree more with you. I certainly do hope we will see more women.
It's both in the country and in our personal interest, right? I mean, we are a very diversity-focused organization. We are 51% women, in fact, right? And we just believe it makes a huge difference, right? And I think those things make us feel that India is in a beautiful golden spot, right? As long as you keep doing the right things, keep focusing on where you can create value from, how do you service the consumer better than others, right? The opportunity is ours to take, right? We will keep building.
And are you looking outside of the domestic market, at least within the region?
So yes, but tactically, right? Strategically, we are very long and bullish on India. Like I said, management bandwidth is the most important resource in the company, right? And you need to see a rupee of revenue incrementally that you generate, right? Where should it come from and where it has the longest tail of growth, right? And we believe India is that market where incremental rupee of revenue for a consumer company is far more valuable than any other place. But we also have always believed in working on new engines of growth, right? And keeping them ready, right? To make sure that the company continues to sort of, grow, right? Which is why, for example, GCC is one region that we are bullish on, right? We entered here about an year back, and the region continues to show very strong positive growth for us. We are now in all offline kind of chains as well in Dubai, from Lulu to Carrefour. We just went in Qatar, in Oman. We're going to Bahrain this year. So GCC is one area where we'll continue to have some flag in the ground and keep building the business sustainably. But majority of management bandwidth as well as investments are all India focused.
Varun and Ghazal, we wish you the very best of luck as you go about trying to build India's #1 FMCG company. Thank you so much for so authentically sharing your story here.